We'll go to the agenda quickly, which will just, okay, it's updated. So that's the agenda. And I don't know if you've been provided the slides, you could read them. Our presenters are myself, Robert Reitman. I'm the national lead for our wine and vineyard group throughout the firm. Michael Corkery is a assurance partner, and in case you don't know what that means, he works with financial statements, audits, reviews, compilations, and other financial procedures. And Michael Nunez, who's one of our tax directors. The objectives of the webinar are to discuss financial hygiene for your winery, audit insights, how you get ready for your business for an audit. And Michael will discuss also, sometimes why you may need an audit of your financial statements, inventory management, and tax implications. So I'm going to turn it over to Michael, who's going to handle financial hygiene and audit insights. If you have questions in each section, please put them in. And as we finish each section, we'll try to address them or leave everything for at the end.
Okay, thank you, Robert. Next slide. So I guess let's start with what is financial hygiene. So financial hygiene is staying on top of your books and records in whatever system that you're using, and we'll cover some of the different methodologies and GL systems or even the use of Excel in future slides. But why is good financial hygiene important? It really helps with the decision-making process. As you're building your business and expanding your business, data really drives a lot of those financial decisions that you're making. Accordingly, you want the data to be accurate. You want to make the most informed decision to ensure that your, cash basis is right, what your inventory levels are, should you be expanding inventory, and how do you make sure that that's correct? Regular maintenance is really, really important. You need to reconcile a number of different areas of your financial ledger on a regular basis. The main ones you want to do monthly, but it strengthens operational health, where what your cash flow is, what your burn rate is, where your inventory levels are. Keeping on top of it reduces, your risk of making a misstep. Let's go to the next one, and we'll talk about some of the key reconciliation policies. So monthly inventory checks. Inventory is what turns into cash, right? That's where you make your money. That's your business. That's your main asset. You want to know what your levels are. You want to know what the growth cycle is. You want to know what the burn rate is. You want to know what your actual expenses are to develop your product. Your cash and POS reconciliations. So what the bank statement has as your cash balance at the end of the month isn't truly your cash balance at the end of the month, because that's not taking into account any outstanding checks that are out there. So it's truly important to reconcile your cash per your GL, whether it's QuickBooks or Excel, to your cash per the bank. And that could be deposits in transit as a big reconciling item. Again, outstanding checks are probably what you're going to see the most. And, there could be a huge payment to a vendor that you sent the check a month ago and it hadn't been cashed because of the, slowdown in the mail service or something along those lines. So you really want to know on any given end of the month. I have some clients that, get bank statements online on a weekly basis and reconcile, but truly by the end of the month, you want to know what your cash position is. Routine financial reviews. As you get into developing, your balance sheet, your P&L, your cash flow, you want to be able to review that probably on a monthly, in some cases a quarterly basis to make sure things make sense. You want to look at these things with an analytical mind and say, okay, what did we do last year? What do the financials look like this year? Does that make sense based on your knowledge of, how your business has gone for the year, what your sales were for the year? Next slide. So these are what we typically see for, usually a beginning business will use an Excel spreadsheet to track their cash position and their expenses. And as the business grows and the number of customers increases and the complexity increases, they'll move on to, a QuickBooks or similar software. A lot of those are online. A lot of those allow for you to actually have a direct feed with your bank, just to import transactions, and then on a weekly or monthly basis, you go through and point them to where they belong on your general ledger. What expense category or asset category a cash outlay or cash receipt goes to. And then as the business really scales and you start getting into a POS integration between your credit card processor, I think QuickBooks or Xero or some of those have some capabilities, but you may need something a little bit more substantial to be able to import your sales, to be able to work and track it with your shipping documents, your POs, and your inventory management to make sure that everything's kind of at the click of a button. You know exactly where you stand. Next. Like I said, on a monthly basis, at the very least, you should be performing reconciliations for your own financial purposes. It's definitely a good recommendation to have an annual budget as you go into now 2025, and track where you are with regard to that budget, where you are with regard to history. The best way to start a budget is to say, okay, let's look at historically where we've been. This is how we finished 2024. Where do we see the business going for 2025? Where do we see some of these expectations for, our expenses going to increase by 5% or 10% based on pricing, or inventory costs going to go up by, 5%? What are our payroll costs going to be to build that budget? And history is really the baseline of it, and your knowledge of where your business is and, what your costs are kind of help you navigate putting that together. Inventory reconciliations, like I said, inventory is your business. That is what you're selling. That is what you're producing. You need to know where that stands, because at any given time on most businesses, that's where your cash is sitting. Cash flow review kind of goes hand in hand with that budget to actual comparison. You want to know what your burn rate is, how much you're spending on a monthly basis, whether it's payroll, whether it's vendors, utilities, things like that. So that's also a good budget to actual, is to look at your cash flows and where you expect it to be and where you stand. Why it matters? Because you're running a business. You need to know the costs of your business, the profitability of your business. Actually, that goes into the next slide. The profitability of your business, gross profit margin. Are you making money when you sell your products? That's what that tells you, right? You have the top line where it's, sales less your cost of sales, comes down to a gross profit. Your margin is, X dollars, and what is that percentage of your sales? Now, whatever is left, say, you're making a 50% gross profit margin. Well, that leaves you 50% for your other operating expenses that don't directly go into your cost of producing the product. Your overhead, your, G&A, office administrative, payroll, things like that. And whatever's left over is your net income. So you want to be able to track both, you know, are you priced appropriately, where you're leaving enough margin for the rest of the administrative side of the business, or do you need to tweak it? You know, are your costs too high? Do you have to evaluate, you know, some other options? And then, you know, there's also, as you grow your business and develop different brands, different product lines, you want to know how each of them is performing. So, you know, while it's tough to do that in an Excel spreadsheet, you can get pretty granular even in a QuickBooks or other platform to be able to, you know, decipher, you know, what your sales are, you know, for this product line, what your costs were for it, you know, what is our gross profit per that product, that bottle of wine, that brand. And that lets you drive the business into, you know, where your focus is or how you have to pivot to make certain other brands more profitable. Next slide. So financial controls. This is something that will evolve over the growth process of your business, right? When you start a business, you could be very light on the administrative side, very few people involved in the actual financial world of the business, paying bills, depositing checks, collecting receivables, and things like that. But it is important to make sure that there are checks and balances in place, that you don't have one person who's paying bills and depositing checks, but you may have two people that are signing anything over a certain amount. Someone reviewing the bank statement that isn't necessarily in your general ledger, adjusting for payments and collections, just to make sure that, you know, nothing, I guess, nefarious or wrong is happening, and to protect the business. I think the periodic internal view I mentioned with the, you know, having somebody else kind of outside of that GL world looking over and taking a look at things. You know, sometimes I recommend for key financial roles, you know, having someone take a required vacation where somebody has to be their backup and they're taking a look at, you know, what's going on while that person isn't around. Transaction documentation. If you're putting it in a GL system, you're doing the right thing. But you want to have backup for all those transactions, you know, in this day and age with, you know, scanners being so relevant, you know, and having electronic information in PDFs. You know, a lot of these systems have where you can have an invoice be basically embedded into the GL system, right? If you click on one mouse click and you have a copy of the invoice, you have a copy of the shipping documents, copy of POs, so that the more organized you are, the better it is for your financial, you know, knowledge of the business, right? The more opportunity you take to utilize everything that's available in these financial platforms, the better off you really are. I think the next goes to a polling question. So this, I think they had mentioned that, you know, we're looking for some insights into your businesses and the industry, and we really want to understand, I guess, what the biggest challenge is for your business. And this answer may be different for each and every one of you, but we'd love to hear from you. So please submit. And I don't know if this is this like a polling question thing? Is this okay, here we go.
So you should see some of the answers
Okay,
coming
pop
in
up.
the chat. Weekly inventory control, shrink is one that has been submitted.
Okay. Yeah, I mean, inventory is the driver in your business. And I guess, if are you counting it on a regular basis? Like how often, sometimes it's a cycle count basis. I don't know how often you're counting your inventory, or, are you doing it once a year and finding the shrink? Then is it coming up when you're trying to fulfill a sales order and it's just not there? The inventory is not there like it should be. It's definitely a challenge to the business, and I think it's
Right, because in finished
something
products,
else,
like
like
the question is, do you maintain when the final product is produced and what its shelf life or life in the barrel is, and how do you controls that spoilage, which is different than shrinkage, and then are there methods to use what you have to mix and blend with something else before it spoils? But that's trying to be proactive.
yeah. I mean, it looks like that he's saying they count weekly, and a few bottles here or there each week, or plus or minus. I don't know the size of the business. Sometimes when you get to a certain quantity, you can get to like a scanning system, but that might be too big. But I don't know if that's based on employee, or if there's security that you need to put in. Cost of sales, I mean, the economy, just inflation is through the roof on a lot of different things. Managing documentation, there's options, and even like I said, the less expensive softwares like a QuickBooks do have some embedded options into managing some of that electronic information and tying it to your GL. Timing of keeping records up to date in our financial system. Yeah.
Another one that came in through the Q&A is managing labor costs because of wage compression.
Yep. Okay, so I think let's move to the next section, the next slide. So financial statements, financial statement readiness. Robert had mentioned a couple of different types of financial statements. They are, the main or the biggest financial statement process or engagement is an audit. And an audit involves, testing by the auditor, sampling certain transactions. They don't test everything, but they sample certain transactions. They look at things analytically. It's a full-blown financial statement package where you're looking at a balance sheet, a P&L, cash flow statement. Depending on the ownership structure, could be a statement of stockholders' equity, and then a full set of notes describing your business, the key balances on your balance sheet and P&L, key transactions that happened during the year, or anything with regard to related parties, legal and other contingencies, leases, or any other significant material item that happened during the year and subsequent to year end, but before the financial statements are issued. The next step down from a financial statement engagement is a review engagement. A review is a lot less in scope than an audit. There's no sampling or really going through and selecting items of your documents or support, but it'll be more of an inquiry and analytic process where they'll be looking for different trends in your business. They'll be analytically looking at your business this year versus last year, this year versus budget, inquiring about the changes that were identified based on materiality level. But the financial statements, other than the report that is attached to them, where an audit report. They have a report of independent auditors that are giving, a basis that that the financial statements are reasonable. The review financial statement is an independent accountant's review report, which basically says that they did no audit procedures. However, nothing came to their attention that would think the financial statements were materially misstated. Other than that, the body of the financial is the same. You're going to have the same financial statements attached, the same footnotes describing the same things, providing all the same information. Then the lowest level of financial statements are compilations. And compilations have a report of, can be an independent accountant or can be an accountant stating that they're not independent. To be honest, this report kind of says that we've done nothing to verify the information in this financial statement, and that we haven't audited or reviewed it. This gives you a lot more flexibility in what financial statements you're actually presenting. You can just present a balance sheet. A balance sheet and a P&L is probably the most common. And then in that report, it'll state that it omits the statement of cash flows and footnotes. But you can include statement of cash flows. You can include selected financial statement disclosures, and it is on letterhead. Another engagement that doesn't result in, a financial statement with any kind of a report is called a preparation engagement, and that's more of for internal purposes. So the monthly reports that, if you have someone doing bookkeeping and writing work for you, an external accountant, they can prepare a package, that has a budget, that has, a balance sheet, P&L, cash flow, and those would basically be sent in a package and, with a statement under it that, we did no assurance work relating to this, but does have a beneficial, or a benefit of having somebody on the outside looking over those financials on a monthly basis or a quarterly basis or whatever you determine to, help guide you as you analyze your business and you grow. So the biggest benefits of having financials prepared, look, for an audit, you're having somebody that said they audited your financial statements and they appear reasonable, right? So if you're going to a bank to get a loan or a line of credit, depending on the size of the line, they'll want either an audit or a review. If it's small, they'll take, a compilation, or sometimes they'll take just tax returns. But on an annual basis, having that financial statement or review, besides, the bank having it to put into your file, it also can uncover some discrepancies or issues that, you weren't necessarily aware of because you weren't looking at it as you were running the business. Sometimes the financials are to plan for the future, right? You're planning on, you don't have a line of credit now, you've been self-financed, but you're going to need it. So, and, we do an audit this year, we do an audit next year, and with the idea that, we're going to go get that line of credit to expand the business, or we're going to bring on a new investor. And that's really, banking and new investors are really the driving force between, I would say, having an audit, maybe a review. I would say compilation, preparation are more just to help you run and manage your business.
And Michael, when an audit is done, what does the CPA have to look at? Like what asset classes that we have to test?
Yeah, it's driven off of materiality. So generally be any of the significant ones. They're going to audit cash, they're going to audit AR, they're going to audit inventory, they're going to audit any kind of liability or debt agreements, they're going to audit, your significant leases, and then they're going to audit the P&L. They're going to audit, sample your sales transactions. They're going to probably analytically look at your cost of sales and your OpEx. They're gonna audit your fixed asset purchases and depreciation. Really just soup to nuts, unless it's a completely insignificant transaction. Next slide. So I think this is more geared towards preparing for that audit or review. It's really, it's the maintenance of your financial statements, the maintenance of your general ledger, your trial balance, having supporting documents for invoices for sales and AR, cash collections for AR, subsequent cash collections, your purchase documents for any other fixed assets or inventory. You know, for an audit, they'll test the inventory pricing, you know, by making a selection of what's in stock at the end of the year and going all the way down to the invoice level to come up with that quantity and the cost per item. Now with, like I said, with everything being electronic, having that centralized reporting package and support for the documentation is much easier than it was before. You know, any kind of accountant that it works with, are, you know, they'll have a portal for you to be able to exchange documents and send things, send the PDFs, send the Excel worksheets, send your reconciliation documents. But, you know, whatever accountant you engage, you should really try to talk to on a regular basis. Even if you're doing an audit or a review, don't make the touch points only on an annual basis. You know, I like to meet with my clients at the very least on a quarterly basis. Sometimes I'm talking to them monthly. It just makes it easier. And, you know, we want to be part of the decision process for you and a sounding board. So please make sure you reach out regularly as you're making major financial decisions to say, you know, what are the implications? Next slide. I mean, we've gone through this, but the key balance sheet, the income statement and cash flow, those will tell you pretty much everything about your business from a financial perspective. So those really, you should know where you stand regardless of, you know, any external financials being prepared. Internally, you should have these for yourself. You should know where your cash balance and all your assets stand and where your liabilities are at any given time, you know, what your business is producing from a sales perspective and, you know, your associated costs, and then just cash flow statement, you know, where you're spending your money, what's your burn rate, you know, how much are you going through, what, you know, how much of a runway do you have for new investments, et cetera. And I think we have another polling question. Are you currently preparing your financial statements for potential audits or investment? And I think we kick this over to Robert for inventory management.
No one wanted, appears no one is preparing financial statements for investment. Okay, inventory management. First thing, there's 3 components of inventory.
Robert, I'm
There's,
gonna just touch base real quick.
Yep.
We do have someone, sometimes it takes them a few seconds to put something in. Carl mentioned streamlining for internal transparency with regards to the previous question that was just asked.
can Carl flesh that out? Because internal, I don't understand the question. Streamlining for what?
I think he's saying he's
Internal
streamlining.
controls?
Transparency, not just to the highest level, but down and a little deeper.
So he's saying more of like a granular financial statements for your internal processes rather than just a summarized like balance sheet or P&L, right? That probably drills down to your product line or your brand or what the actual, you know, inputs are.
Yep. Yes.
Yep. Yeah, you'll see that more for could be built into that preparation package that you're doing on a monthly basis, right? And you're going over with the key members of your management group or your accountant.
Because QuickBooks, allows what's called classes. And then there would probably be more onus on whoever's inputting the information if you're trying to do it by product line. So it's something that could be looked at that's more internal reporting than financial statement reporting to do a product line. So back to inventory. There's three components. There's raw materials, there's work in process, and there's finished goods. So why do you want accurate inventory tracking? Well, you want to see, do you have enough raw materials based on what your projections are making product releases? I don't know how many of you buy juice from other states to mix in with your products. So that's another thing of what's the cost benefit of helping add these to your product mixes. Another thing would be, which is you have supplies, right? So someone put in cost of goods sold. So what's in your cost of goods sold, right? Bottles, do you have corks? Do you have screw tops? I know there's some vineyard out in Suffolk County that uses cans to put some of their product in. Labels is a whole nother issue. It's not a big component because you need to have it approved by state. So in your inventory system, besides where it says inventory valuation methods, what components are you putting into your work in progress, right? Are you putting labor? Are you developing a percentage of labor that goes into each product? The people, how do you allocate your cost of warehouse people to the cost of goods sold? Also, I guess the storage facilities, the overhead, are there utilities you need to add into that? So you would have to discuss with your accountant, before just establishing FIFO and LIFO, what costs go into the product so that we can manage it better. And like Michael said, there's integrating, there's systems where you can integrate with financial reporting. You'd also have to make sure it depends on how many SKUs you have, because some systems have issues with that. Next slide. So it was mentioned previously, do you do an annual count? Okay, people may, and then it's great to do an annual count, but then do you reconcile it to your records? What some people do are cycle counts throughout the period, or once a month, just take a certain area. Now, this could be a warehouse, tasting room, retail stores. Another question is like, does someone go around the warehouse or look at the bottles to see if there's any spoilage or damage when it's just been sitting there? So I was in Spain and went to a cava winery, and it was pretty interesting as you drove into the caves and they took us down, and you see all these bottles with dust, and we were all looking like, how do they keep track of this stuff? Because it's like buried underground. So supposedly they have codes and items like that. So regular inspections matter. So if you're going to implement some type of system, you also got to then do physical counts, because somebody said, what about shrinkage? If you know that in your tasting room you're going to be short bottles, that's just something built in, and you come into build up a factor, just that this is how much we're gonna spend in the tasting rooms, and that becomes, I guess, part of your sales cost. Next slide. Also, we're talking about automation. We haven't said that fateful term AI. I was working with some professors from Rutgers Business School who are into automation and items like that, and how to use technology. And this one professor showed a slide where, depending on how large the farm was, or in this case, it was, I think, cattle, where they were using drones to go fly over and do inventory counts. So there's all types of technology you could use to help you manage your inventory. Another important reason is insurance, right? If you don't have good controls over your inventory value, you may be overpaying insurance premiums, or you may not be covered, God forbid, if you have a loss, because your inventory on your insurance policy is not same as your actual inventory value. And I don't want to get into where certain people put what are reserves in, where they don't want to report certain amounts of inventory because they think it's saving them taxes. But from experience, when you go to sell the business, that harms you. So there's a lot of issues regarding about inventory management, enhanced cost management. Are you projecting out what you're going to need to buy glass? I don't know how many of you use cork because I know those prices have been going up. So it helps you forecast and then helps you control costs. And, you may need to look at, okay, we want to produce this type of wine. What do we have in raw materials? Do we have to buy juice? Do we have enough grapes in the vineyards? And are they going to come online in time so we can get these out to the market? So it's, you know, I always, people think they can do accounting and inventory and tax by themselves because they want to save money. And it's all of our experiences that you don't save money by doing it yourself. Your best skills are running your business, and you need to rely on professionals to assist you, grow and manage your business. Next slide. See, that was easy. So what tools are you currently using for financial management in your winery? So I don't know if anyone's using a separate inventory system that integrates with their accounting, if you're using point of sale for the tasting rooms. So I don't know if anyone wants to put anything in for that. Otherwise, we can go to Michael to talk about tax implications and compliance.
Well, we have clean financial records for operational and use by management to run your business. But a third facet is having good, clean records for tax compliance purposes. So to the extent you have streamlined financial process, it makes your tax compliance streamlined as well. We want to reduce risk of errors in reporting for property tax filings, sales tax filings, and federal and state tax filings. So in terms of multi-state filing, most businesses do sell in multiple states now. So one of the biggest issues that I have experience with is clients that have expanded into other states, but they're not filing any kinds of tax returns. So it's now been required that companies have to stay on top of the activities that they are conducting in other states, whether it's salesmen's activities, whether it's sales activities. because this may rise to a level that requires them to become tax compliant in these new states as they expand their business. Next slide. So we want to stay on top of reducing errors so that we can also reduce and stay on top of our tax liabilities. We want to make sure that we know the additional deductions that may be allowed in your current state or in a new state. We want to maximize our exemptions so we can take full advantage of any tax credits or potential tax breaks that a state may be undertaking. For example, perhaps in a state they have a wine industry, a growing wine industry, and they're giving sellers and wineries a tax break or a tax credit for increasing activities in their state. And then thirdly, for long-term tax planning, to the extent that we are on top of our tax liabilities, we now can project, based on increasing sales, what our future tax liabilities may be, so that we can do some strategic cash flow planning as well as tax planning. Next slide. So the particular taxes that come under review are mainly for sales tax accuracy. We want to be able to have accurate sales tax filings, whether they are a monthly, quarterly, or annual filing, depending on your volume of business. So precise records help us to have accurate sales tax filings. Then at the federal level and at the state level, we have excise tax. And of course, excise tax is specific to wine production, the sales, and we want to be very compliant in our excise tax reporting for the same reasons. Then property tax documentation, various states have different property tax filings, whether it's on real estate and land improvements or on business property. Having accurate property tax statements that flow from our financial statements make property tax compliance paramount in our reporting. So we want to review our processes in each of these areas of tax for this particular reason. All right, next slide. All right, so the benefits, well, we want to always be audit ready. Nobody wants an audit, but to the extent that we have centralized tax documentation, and of course, that comes about every year when it's tax filing season, we want to have a depository for certain kinds of deductions like research and development credit. Your GL or your Excel spreadsheet should be set up to gather all the information that goes into tracking your research and development costs. That would include payroll cost, experimentation, or any other overhead costs that are part of your research and development. I have regularly met with clients to have touch points with them for research and development if we're doing a project for them, and making sure that they are accumulating data. In terms of clients that are expanding into other states, we do have touch points to review their sales by state so that we know when we meet certain nexus thresholds that we have to now register with the state and be tax compliant. So this is a year-round process and very important to being ready for tax compliance and potential audits. So the biggest issue
Michael,
that we have. Yes.
Do you want to just explain briefly what nexus means?
All right. So nexus is a legal term. It means having a connection with the state. And today, these states have expanded their definitions for what constitutes doing business in a state. And if you meet these nexus thresholds, and they do vary by state, by tax. So the most common one is for sales tax purposes. To the extent that you have sales both retail and wholesale that are $200,000 or more in a state, and you have nothing more, that that reaches the level of causing you to have to register in a state and file a tax return. So it mostly turns on sales volume, but it can involve certain levels of payroll expense as well. So most all businesses now sell to customers in multiple states now, and it is absolutely required that you track your sales by state to ensure that you become compliant when you reach a nexus threshold dollar amount. For income tax purposes, that threshold is most often greater than the $200,000. And it ranges, like in New York, it's over $1 million. In Hawaii, though, it's as low as 100,000. In the state of Washington, it's like 280. In Ohio, it's about 250,000. But we do have our clients track sales by state, and we review those reports so that we can let them know that they're getting close to having a compliance obligation in a state. Now, for sales tax purposes, that's the most common one, but we do take into consideration materiality. For financial statement purposes too, uh, for contingency reporting purposes, uh, even our auditors now have to be aware of whether a client that there is under review or under being audited, or we're providing attest services to, that they have their arms around potential nexus liabilities, because it can rise to a level of disclosure for financial statement purposes. So that's the most common issue now is really nexus and being compliant. You don't want to be disappointed when a state auditor comes knocking on your door and issues you a tax notice for a tax balance due because you never registered in the state, and now you have a significant tax liability for non-compliance. So this is the reasons that we do want to be now compliant for your multi-state activities, and having good records so that you can get your arms around potential credits, or like the R&D credit in the various states, and for federal tax purposes as well. So our next polling question.
How frequently do you update or reconcile your winery's financial records?
Yeah, somebody answered monthly. Somebody else said yearly, daily. Ah. Daily for sales. Right. So not to get you all scared and nervous that somebody's going to be knocking at your door based on what Michael said. You need to have the information, because you're all business owners, and then you have to make a business decision. because let's say on the audit side, we used to have what we used to call creeping materiality. It's not material, but then over the years it builds up and then it becomes material. So you need to be aware of where you stand so that, you know, you can, it all comes down to, you have to have updated and, let's say, correct financial statements so you can make business decisions. That's what it comes down to. And once you have the proper information, you know, your accountant can tell you what you're supposed to do, and then you have to make a business decision what you want to do. But I can tell you from experience, we had a client, and I don't know how many of you consign goods or have, I'm assuming very few of you have inventory out of state, but we once had a client that had coffee beans or frozen coffee in New Jersey. He never wanted to file. And then we get a panicked phone call where he says, the New Jersey Department of Finance is at the warehouse. And if I don't file my tax returns by tomorrow, they're confiscating my inventory. So, you know, with electronics and all digital information, all the taxing authorities, they have a lot more information than when everything was by hand on, you know, in the old bakeries on the back of an envelope. So, you know, that it's really a major business issue that you keep good financial records. So are there any other questions people want to ask related to accounting, internal, external, taxes?
Robert, a question came through, for anybody that wants to answer. What are the top one or two, if we had to narrow it, which I know we don't want to, but if you had to narrow, what are the top one or two essential monthly controls that our attendees should think about? That they should adopt?
Personally, inventory and cash. Know where your cash balance is, based on what's outstanding at the time. And you want to know what your inventory is because that's what's going to generate your cash.
Mm-hmm. Yeah.
Awesome. That is the only question that came through so far.
Okay, well, it's been a pleasure. And the contact information, I think, do the participants get a copy of the slides? I know there's a recording.
They will get a copy of the slides, and we'll also send out your contact information in the follow-up as well.
Perfect. If there's any way we can help all of you, any of you, you know, we're happy to do so. Reach out to any one of us. And if it's not a question that we can answer, we have plenty of other experts in different areas within the firm that we can bring into the loop.